Los Angeles home prices are down, Los Angeles list prices are down, and one of the most important metrics that we track here has just flipped. It's like a yield curve inversion, or when Puxatawny Phil walks out of his burrow and sees his shadow. It's a big indicator of what's to come, and what it's indicating is that this is going to be an especially good winter season for Los Angeles homebuyers. Welcome to the Los Angeles Real Estate Roundup for December 3rd, 2024, brought to you by Blueprint. If you're the kind of homebuyer who's on Redfin or Zillow every day finding your own properties, you don't need to pay an agent 2.5%. So don't. Get the Realtor services you need while saving 60% on Realtor fees. Learn more at buywithblueprint.com. Now let's get into the data. All right, and as always, we're looking at the latest weekly print from Redfin for the Los Angeles metro market. Home prices in Los Angeles are down for the second week in a row, down to $902,000. And this is the kind of movement that we expect to see this time of year. Home prices begin to go down here in October, November, and fall all the way until right here in February. So this, in general, is already my favorite time to be working with my home buyer clients. And as we'll see later in this video, this winter season is looking to be even better than usual. Because what's even more encouraging than home prices falling for the past 2 weeks, which of course we should expect, is the median price of a new listing in Los Angeles is falling even faster. The new listing median price in Los Angeles has fallen for its third straight week to $913,000, and you can really see the slope of the decline has steepened in this past week. This is an indication that falling prices are a trend that we're going to see into the weeks ahead. Now let's take a look at where we are inventory-wise. New listings have been trending down for the past 8 weeks, which is not unusual for this time of year, though notice that right around now is when 2022 and 2023 had this pretty sudden fall off in listings, and so far 2024 has not followed suit. So even though new listings has been on this pretty straight trajectory downward for the past 8 weeks, we see that whereas last week we were 3.7% above the same week last year in terms of new listings, this week we've suddenly jumped to 14.6% above where we were last year in terms of new listings. So if our new listings line continues with its current trajectory, it'll put us well above 2023 and 2022 in the category of new listings. That's good news for buyers. Of course, home sales is also outpacing last year and the year before. This past week, we saw 982 homes sold on the Los Angeles market. And if we take a look down here, this is the year-over-year graph, we can see that this year, 2024, the orange line has had a pretty steady growth relative to last year in homes sold. Pending sales is also going strong. Again, we had a bit of a decline over the past few weeks with a bounce back this week. This week we saw 1,101 pending sales. When we compare pending sales this year to last year, we're actually at a new peak of 18.6% year-over-year growth in pending sales. That's our highest number this year, and this points to the expectation that home sales will continue to be elevated in the weeks ahead. So with new listings up, but also home sales and pending sales up, what we have is a decline in active listings, which is pretty usual for this time of year. Again, this is the time of year that activity overall declines, but what happens is more buyer activity declines than listing activity. In other words, sellers call it quits, but more buyers call it quits. And so what you end up with is the time of year when prices fall. And what you'll notice is that even though active listings is declining, we're currently at 15,679 active listings on the Los Angeles market. We are way ahead of where we were a year ago. This time last year, we had 13,167 listings on the market. So what we're seeing is a market that has more inventory, has more sales, has more movement. It's an overall healthier market. And I think we can see that health reflected in the weeks of supply chart. Right now, we are at 16.3 weeks of supply. And what's notable is that this is the first time since the beginning of the year that this year's weeks of supply has fallen below last year's weeks of supply. So the same time last year, we had 17.1 weeks of supply on the market. So the market is still pretty competitive relative to last year and the year before, but significantly improved over 2021. 2021 was the last gangbusters crazy year in which prices just skyrocketed. So if we're looking at a somewhat competitive, somewhat balanced market, why am I saying that this is going to be such a good winter for homebuyers? Well, two stats really point in that direction. So first, we have median days on market. This is a measure of the median number of days that a home is on market before it sells. And if we look at 2024, the orange line, we see a steady and sustained growth since before the middle of the year. Right now, we are at a median of 45.5 days on market, whereas last year at this time, we were at 37 days on market. This is a slightly slower market, which is healthy for Los Angeles, which is typically a very fast market. And what's interesting is that we're just about right where we were in 2022. In 2022, at this time of the year, we had a median days on market of 45.2. And remember, 2022 is the year when rates doubled and home prices plummeted. Obviously, right now we're in a different situation, but it's worth noting that the market is similarly slow. A slow market means buyers have more time, have more options, and can get better pricing. But most importantly, the big flip I was teasing at the beginning of the video is this: average sale price to list price ratio, which is the ratio, of the sale price to the list price. And right here in the center of the graph, we have 1.00, which is another way of writing 100%. So when each year's line is above this red line I just drew, it means that homes are selling for more than they're being listed for. And when the line is below the 100% mark, it means that homes are selling for less than they're being listed for. Obviously, if you're a home buyer, you want the sale to list ratio to be under 100%. That means homes are selling for less than their list prices. And this week, for the first time since February, we achieved a sale to list ratio below 100%, just below 100% at 99.9%. Why is this move under the 100% line significant? Well, you notice last year, the blue line, we started well below 100% and then never fell below it again. We finished the year off just above 100% at 100.08% to be precise. And 2021, our red hot year, was never even close to being under 100%. In 2022, when rates doubled and prices plummeted, we crashed through that 100% mark pretty early in the year. When was that? September. And now in 2024, finally, the first week of December, we've crashed through the 100% average sale to list ratio. And as you can see, these trends are hard to buck. To me, this is an indicator that pricing is going to improve even more as we approach the end of the year. I've said it before and I'll say it again. The best time to buy a home is from Black Friday until the Super Bowl. This is a period when not as many sellers are selling, but also nobody's buying, and you get better pricing. Will the rest of the year pan out as I'm predicting? Subscribe and keep watching to find out.